Hi, this is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. Today, we are talking about SentinelOne, ticker S symbol. And look, this fits right in the wheelhouse of what I'm normally looking for. I'm looking for these types of exceptional companies that have this runway of growth, tapping into a huge market and growing at very attractive rates. SentinelOne checks those boxes. The question is, are they potentially unrivaled? And this is a little bit more of a challenge for me. I look at SentinelOne, I'm looking at fantastic results. Yes, you can sense my excitement, but this still remains a no-hype channel where I'm focused on the fundamentals, and we'll talk about how that plays into valuation. And so yes, this company is going to be very richly priced. It's IPOing at the end of June 2021. And even though it is extremely very richly priced, the stock, if it delivers on its recent growth and its potential, could still result in favorable returns for shareholders over time. So I'm watching it with an open mind. That said, cybersecurity in itself is a red hot space because it seems like every other week there's a new attack, another company, another country faces a problem. This is an area that's just been growing significantly, and there's no question that SentinelOne is one of the pioneers in the space. So let's first talk about cybersecurity to understand its developments over time. So looking at, let's say, a little bit of history from the perspective of SentinelOne, where they're saying, look, you go back a few decades ago, it was all about antivirus, born in the late 1980s, and it's fairly straightforward with McAfee as one of the players, where everything is good unless we say it's bad. And then you had a bunch of other players sort of enter the market, same stuff, different wrappers. And so this does start making me nervous, thinking like, oh, wait a second, doesn't this mean you could have something now and then someone else comes up with something that just beats you out in the future? You know, you might be McAfee here, but then, you know, you have Symantec come on later on and other players come on. And so then, you know, you fast forward a bit, then you have this network controls, which, you know, as the way SentinelOne described it, is the catch in motion on the network, such companies like Palo Alto Networks. And then you have dynamic analysis or sandboxing with a company called FireEye, which has also gone public, where it's sort of saying, hey, let's just test it out to see, let's let it run, see what it does, see if this is potentially a problem, these files that we have on the server. And then next up, this is, you know, you're looking at 20, you know, teens, you start having more companies that are the first wave of endpoint detection and response. And keep in mind, many of these players are still around. And so this is the first wave of EDR. Once again, that endpoint detection and response. So why do you need that? And here it is. This is once again, you know, a slide from a previous SentinelOne presentation. The challenge is that almost all breaches originate at the endpoint. Meaning, if you have a global company, you might be acquiring, let's say, new companies. And as you acquire that company, they might have software, they might have malware, they might have something that's a vulnerability that can attack you. Or you have a global and distributed workforce. Or you know, COVID accelerated the work from home. And so you have people working from home creating endpoint vulnerabilities. And that's the challenge. It's not, you can't just protect your local server. And they capture that in this comic here. And in this corner, we have firewalls, encryption, antivirus software, etc. And in this corner, we have Dave, who represents human error, working from home, Dave. And darn it, you went to the wrong website. You were, you know, checking out some sleazy sites. And you know what? Now you've compromised the whole company. You know, and maybe, you know, who knows, you know, what department he works in. The reality is, global work from home, I think, is an industry that's here to stay. It's certainly a trend that picked up in the last few years. And so do you think endpoint security is going to be important? I suspect so. And then, you know, in response to that, a lot of folks sort of wake up to it. You have CrowdStrike and a whole bunch of others. So many players entering this market, new vendors abound. It does make me sort of on edge to see a chart saying, hey, here are all the players, you know, and this is how it's evolved over time. And it makes it tough for me to say, oh yeah, this player, SentinelOne, is unrivaled. And as regular viewers know, it's really important to me, at least for my own personal financial journey, which you can, you know, go to www.unrivaledinvesting.com to follow my personal journey. It's really important to me to find unrivaled companies. And the reason why is if you're unrivaled, it gives you the right to win. That's the theory, at least. And if you have this right to win, that means you can take market share over time. And it should mean that you grow faster over time. And that growth, that fundamental growth, is ultimately what drives shareholder returns over time. And so that's why it's a key filter. One of my first questions I ask for every company is this unrivaled? Now, I sometimes do settle on this is very strong and I think this will grow as well. And this might just fall into that basket as well. So let's look at SentinelOne, which is, here it is. There's a lot of players out there, so I'm going to need to judge it by their execution. This can't just be them saying, hey, we're exceptional. This has to be, well, let's see what your numbers actually support. And you look at their numbers, and they're posting fantastic annualized revenue growth, where their annualized revenue in the most recent quarter was around 161 million on an annualized basis. So these are fantastic results. But keep in mind, SentinelOne is not the only one with hypergrowth. And we look at CrowdStrike, which was one of the top dogs in the race, in my opinion. They are 7x bigger than SentinelOne, and they are also growing very quickly. Here it is, 1.2 billion in annual recurring revenue, 74% annual recurring revenue growth. This compares to this 161 million and 96% growth. So this is a big deal, because when you think about that growth, that means like on a year-over-year basis in any given quarter, they're growing about the same size as SentinelOne in total. So it's like growing by the size of one SentinelOne in a given quarter. So it really is quite impressive what the competitors are and what they're facing. And look, this is another company. This is straight from the CrowdStrike presentation, talking about how we're a first cloud native, SaaS endpoint security platform. So SentinelOne clearly isn't the only endpoint security platform out there, as CrowdStrike is posting up fantastic numbers, bigger and growing at a comparable rate. So it does make me a little nervous to see that, as I'm sizing up SentinelOne. That said, SentinelOne is growing a little bit faster. So that is worth calling out. And look, once again, maybe it's not unrivaled, but maybe, there are multiple winners in this market. This market's going to be $40 billion plus, and the attack cadence has only gotten heavier and more significant, I'd say. You don't want to shut down, let's say, the global, gas pipelines for, the United States, or you don't want to shut down the internet in a given country, or utilities. It has only become, the stakes have only gotten higher. And so I'd argue the market for these companies has only gotten bigger, and it's even more important to have top tier players. So what's the value proposition? What's SentinelOne's value proposition? And the way to think about it is, so you do have these legacy antivirus players that were largely ineffective and reactive. So then you had the evolution to the human-powered endpoint detection and response, which emerged as the alternative, and then it sort of set the standard rule of 110 and 60, which was viewed as the best achievable cybersecurity outcome. But it was the way you think about it is it was capped as 1 minute to detect an attack, 10 minutes to investigate it, and 60 minutes to respond. But the way SentinelOne describes this is akin to bringing a knife to a gunfight here. So that's a problem, because here it is, if attacks can happen in milliseconds, you don't want to have a human response in a minute, to have 60 minutes to respond. You want, let's say, an AI that's constantly probing the endpoints, constantly looking at behavior analysis, as well as statistically, static models. So, combine both behavioral and static models, AI at the individual endpoint, at the individual device, to say, hey, is this device acting in a different way? Maybe it's trying to retrieve data that it hadn't retrieved before, let's say from the company's servers. Why is it trying to do this? And to have that sort of behavioral question, that is the future. That's really what the crux of it is here. And so as you think about this company, it's a combination of cloud native, born in the cloud, and AI/machine learning first approach. And they talk about how their platform ingests, correlates, and queries petabytes, so tons of structured and unstructured data from a myriad of ever-expanding, disparate external and internal sources in real time. So this is looking all over the world, trying to figure out, hey, where can these threats come? And this is the key element, this last key element, where they talk about how their AI models, both static and behavioral, based on the behaviors of previous viruses, where it predicts file-based attacks of all types, even previously unknown threats, often referred to as zero-day attacks. So the whole goal here is, if you can have a software vendor say, hey, we are focused on zero-day attacks, so attacks that haven't even happened before. So a lot of the way traditional cybersecurity works is you look at what attacks have been inflicted on someone else, then you go, oh snap, we got to update, what we protect against based on this virus that we know is out there. So now we'll update what we have and make sure we spread it across all of our customers. So let's look at what the crowd is doing, a CrowdStrike. Let's look at what the crowd's doing, and then based on seeing the problems we see out there, then we update what we've got. They're saying, hey, you need to have an AI-driven approach that's looking at all this data in the cloud and saying, hey, based on the behaviors of the user, we need to react before a virus even has the potential to strike. And so one could understand how this could potentially be unrivaled, where you need to have players that have the knowledge base to prevent these types of attacks, to effectively say, hey, we don't even let it start. We don't even let it spread. And one could see how that could create a company that's potentially unrivaled. That said, it would probably be stuck with a handful of players that have the wherewithal and ability to do it. Maybe it's a CrowdStrike, SentinelOne, and maybe a handful of others. I don't see this as being a hyper-saturated space, because ultimately it's like, hey, who has the ability to do this? Who has the knowledge to do this? Who has the data and collected the data to do this? As more time passes, it's going to get harder and harder, I would suspect, for new players to come in and sort of compete with, let's say, these AI models that have been super fine-tuned based on all this data, both behavioral and static. And so looking at this, once again, a combination of cloud native and AI driven company. And look, I like to see this. Oftentimes you don't see this with companies, but this SentinelOne is clearly a fighter. I mean, this is the way, on their website, they have direct comparisons of them to these top players, CrowdStrike, Microsoft, Symantec. And so this is, that would be like me saying, hey, make sure to hit that subscribe button at Unrivaled Investing because you don't want to check out this other channel. Now, I'm not going to do that, of course, but here it is. Like, that's a fighter mentality, saying, look, here's why we're better than these players. So that does make me think, look, these guys are in it to win it. Even if they are a smaller player, let's say, than CrowdStrike, they are going to do everything they can to sort of measure up and show what, that they can compete in the big leagues against Microsoft, against CrowdStrike. So that's what I like to see. And they're clearly tapping into very important verticals like energy and finance. So what about valuation? That's the key point. And that's a problem that a lot of investors struggle with, because they just say, hey, buy a great company at any price and it doesn't matter. That is the wrong approach. You always need to consider valuation, in my opinion, especially if you look at some of the world's greatest investors. They always consider, well, wait a second, does this valuation make sense? So if anyone puts out, saying, hey, this is a good company without considering valuation, double check it. I would want to think about it. And so what about valuation? What I want to do is first a quick plug, where if this is your first time tuning in, please make a point of subscribing, hitting that thumbs up button if you like learning about potential multi-baggers. Also, if you want to follow my personal journey, go to unrivaledinvesting.com. First week of the month, I call out my full portfolio. During the month, I call out a potential multi-bagger type of stock that I think has hundreds or even 1,000% upside. And the reality is, just finding one potential multi-bagger can change your life journey. So if you're interested, check out my life journey in terms of my own personal financial journey at unrivaledinvesting.com. So let's actually dig further into this valuation. And so as we look at what's going on with SentinelOne, there is some aspects like, look, you want to compete with the big boys, you're going to have to spend big boy money too. And that's the challenge that they're facing here, in that pretty much every period that they look at, their operating losses are in excess of their revenue. So they're spending 100% more on, fees or excuse me, their R&D, sales and marketing. So their losses are in excess of what their revenue is, which is pretty incredible. Just to see that, 93 million in revenue in fiscal 21, 115 million in losses, operating losses. And so that's, it does make me wonder if you're at a little bit of a scale disadvantage, let's say, versus, let's say, a CrowdStrike, which is still unprofitable or much closer to break even. So this does put them at a trickier position. That said, it does support why they want to raise $1 billion in fresh capital in an IPO. So this also, whenever you're looking at a company like this, it does mean, let's be very straight here, that means the investors that are valuing it, they're valuing it on future margin assumptions that can be way volatile. So that means the inherent volatility of the stock is going to be really high. I would say off the charts potentially, because you're looking at these really huge losses versus what are the margins you're assuming. So expect volatility. That's all I'm saying is, in times where people are pumped, they'll give full credit to what their future margins could be, even if they're nowhere near that. Which, as I previously called out in a video with Ray Dalio, saying like, hey, look, if interest rates rise, that makes these types of companies' future profitability way down the road makes them way more suspect to interest rate hikes. A significant risk. And so that's something to be mindful of. Which, when things don't work out and when everyone starts turning negative, which happens from time to time, everyone's not always gung ho about stocks. In the darker moments, people say, well, what is this company's ultimate margins? Oh, it's not unrivaled, so do they have to compete on prices? And does that mean their margins are lower than I expected? In which case you have dramatic stock price volatility. So that is something to expect as you look at this. And look, that's just honestly, when I look at every stock, I personally view them as super volatile. Any stock I buy, I think, man, this could drop 50%. I think that's a healthy framework that one should consider with every investment you consider. And so, looking at this hugely unprofitable, and as I, consider this valuation framework, looking at currently expected to be around $32 a share. That's a ballpark figure, or an $8 billion valuation. I'll save this sheet exclusively for my Journey subscribers if they want to play around with it. And so you can see the 100% growth in fiscal 21, maybe 100 to 120% growth in fiscal 22. Look, this thing can develop differently. So I'm putting a range here. These margins, these optimized margins, this is way, they are nowhere near this right now, as I already articulated. And so this is, maybe it's 20 to 30% over time. Maybe I'm being conservative here. If you have a different call out on what you think this could be, I'd definitely love to hear it. Slap on a 25% tax rate, and ultimately you're looking at an optimized margin of trading at an earnings multiple of like 170 to effectively like 200, 300 times for a company growing at 100%. That doesn't strike me as super compelling. I prefer to find companies with effectively this adjusted PEG ratio, or price to earnings to growth ratio, of 1. So if I saw a company trading at, let's say, 50 times price to earnings to growth, and keep in mind that's optimized earnings to growth of like 50 times and growth of 100%, then I'd be like, okay, now I'm super interested. This looks pretty cheap. And honestly, that strikes me as a good source of finding potential multi-baggers. So if you know any companies like that, definitely want to hear it. Leave a comment below. And so that is what I'm looking at from this valuation. I see a very, very rich valuation, 40 times forward sales, 40 times plus forward sales. And so then the big question, and I've highlighted it here in orange, usually I do it in yellow, just to say, hey, these are pretty high assumptions. Now, maybe they deliver on it, but this is high assumptions. You're talking about, stratified, you're talking about really, really exceptional territory here. Annualized growth over the ensuing 4 years beyond this next fiscal year of, let's say, 60 to 80% growth. That is really, really high annualized growth. And to put that in perspective, that effectively say, hey, their revenue grows by 10x over the next 5 years in this high case scenario. And so then what's the end multiple, 5 years out? And once again, I'm a long-term investor, so I'm looking at a 5-year time frame. And so let's say 30 to 60 times. That's a range, once again, based on this sort of annualized growth. And so based on that, effectively saying, look, at this $32 price, maybe there's a couple 100% upside. So you know what, given that at the time of this making of this video, if the stock pops, it wouldn't surprise me, because right now you generally have a bubblicious environment and folks are saying, hey, maybe there's a lot of upside here and downside over 5 years of about 30%. Now keep in mind, this is completely hypothetical. This of course could go way higher and way lower. I view this as priced for execution. I'm not saying for perfection. I'm saying for execution, because if they do not execute and execute really, really well, then this whole framework gets tossed out. If CrowdStrike says, hey, we're going to do everything we can to crush SentinelOne, and they compete on price and what have you, and that's the challenge with not being unrivaled, I'd say, is that this whole framework gets thrown out. Then maybe this whole thing, the growth rate's a lot lower, the valuation goes a lot lower, stock price goes a lot lower. And that is the big risk as you look at it. So that's why I put the valuation multiple range and that growth rate range, sort of calling out as like, hey, this is definitely a little riskier than what I usually call out That said, it does have multi-bagger potential at that IPO price, the expected IPO price of around $32. And so it does strike me as interesting. That said, not every company needs to have this sort of price for perfect execution. Sometimes you can find things that are more conservatively priced where it's like, hey, even if you don't execute exceptionally well, I still think that you could have a very attractive return. I call those situations out for my Unrivaled Investing Journey subscribers, but I also occasionally call them out on YouTube. For example, I recently called out Alibaba, which, you can watch that video where it's, I'm looking at that, I'm sort of saying, well, based on this, using what I think are reasonable valuation assumptions, it strikes me as pretty attractive risk reward. Once again, for my Unrivaled Investing Journey subscribers, I do call out monthly potential multi-baggers. My May potential multi-bagger was a stock where effectively trades below liquidation value and I think has 2 to 3x upside over time. And that's the type of risk reward that I'm looking for, where it's like, oh yeah, there's this valuation backstop. And then when I look at my June potential multi-bagger, once again, I'm looking at this range of valuation and saying, hey, if you consider how it's currently set up, I think that there's 200 to 300% upside. And in my downside case, if this doesn't quite work out, maybe it goes up 50% on my downside case, barring some sort of exogenous shock. So if this video has been helpful for you learning about SentinelOne, please make a point of subscribing, hitting that thumbs up button. But I also want to hear from you, because if you, let's say, are a cybersecurity expert, I definitely want to hear your thoughts below. If you feel like there's another angle that I'm potentially missing on SentinelOne. This is my first time really looking at SentinelOne, and I'm curious about how you see the cybersecurity space, because I'm looking at a lot of players, a fast-growing market, but a lot of big players that are also growing quickly. So it's not really clear to me that, hey, this one's definitively going to win. So if you have any thoughts on the cybersecurity market, or if you have any thoughts on my valuation, particularly the range of multiples, I'd love to hear it, whether or not I'm being too conservative or too aggressive. Thanks so much for watching.